There you have it. Well, once again, Jeff Benson, Jacksonville, Florida, Building Risk Program Manager for Victor. Really appreciate you taking some time out today to hear some stories. I think you'll like the message today. I was talking to some of the group earlier today, and this is very, very good news. So it's kind of fun to have a webinar where we're really touching on good news in the world today. So we can just take a little break for the next 30 minutes or so. Now, what we're going to do is I'm going to run through some screens. I'm going to show you some numbers. This is the economies of construction. So there's a lot of metrics. And then what I will do is tie that back to builder's risk. And then we will open this up for questions. So I definitely, any questions you have on builder's risk, by all means, ask away at the end of the presentation. And if we don't get to all your questions, I personally will give you a call. So ask away. And once again, really appreciate it. The economics of construction. And what we're going to touch about today is, I'll touch a little bit on what I consider small commercial, but we're really going to focus on residential construction. And I think you'll find the numbers, as I was putting this together over the last few days, I was really impressed with the numbers in this country. So, value of construction put in place. So, it took me a while to look at this slide. I was thinking, okay, all private construction in the United States, this is in millions of dollars. So I had to look at this. So that means you got to add 6 zeros to the numbers you're looking at on the screen. So the way I look at this, it's 1,000 billion. So value in construction put in place in the United States, $1.1 trillion. It's the first time I think I've ever said trillion in a presentation. So this gives you an idea of what's out there in the United States being built today. And this was year-end numbers for 2020. So these are very current numbers, and you can see the split between residential and non-residential. And we're going to spend most of our time today talking about residential, but just not that we're going to get into it, but the small commercial market has been relatively healthy too. But the residential market is setting records as we speak. So we're looking at $1 trillion of value put in place. Let's look at the current state of housing. And what we're going to do is focus mostly on detached single family. Apartments and multifamily are a whole nother conversation. So just keep thinking about single family detached housing throughout the United States. First of all, some of the numbers, some of these are through November and some are through December. Most of them are through December year end. Housing starts jumped 5.8%. Home building increased 5.2% on a year-over-year basis. Starts totaled 1.38 million. Housing start is just that. So, they've actually started construction when you think about a housing start. The last little bullet over on the right, the last square, single family home building soared 12% year over year. That's 12% growth from year end 2020 from year end 2019. So throughout all of the stuff that's going on in the country and in the world today, the housing market grew by 12%. Adjusted annual rate of 1.338 million units. And I've been doing this for decades, and kind of a rule of thumb was if single family starts are over 1 million, we have a healthy housing market for new construction. So 1.338 million is very, very strong. It's the 8th straight month that housing has grown. So it'll be interesting to follow this year. The housing, the numbers are released monthly, and I think usually around the 15th or the 20th of the month, they release the numbers from the previous month. So they should be releasing the January start soon, but all indications are the housing market is very, very stable and growing. Some more stats, and we're going to tie all this back to builder's risk in a few minutes. So just kind of bear with me on this. The inventory of new homes out there is currently at 4.3 months. Now, this is a national average. I'm going to give you some regional numbers as we progress in this, but 4.3 months, historically, 6 months is about the right level of inventory for new homes. So 4.3 is down below where it normally would be. And then when times are really slow, that inventory goes up, obviously. And not to really give you a lesson on basic economics, but housing is really supply and demand. And so all we're talking about now when we talk about inventory is supply. So average sales price, $394,900. That is the highest it's ever been for the average sales price of a single family home in the United States. We're going to talk about regional consideration there, but 394 is the highest it's ever been. The median size of a home, and this is 2019 numbers, and I fully expect once they release the 2020 numbers, it's going to be even larger. So the median size is 2,322 square feet, which is the largest median size that's ever been in single family housing in the United States. And if there's going to be a trend on all these numbers I give you today, you're going to see the largest, the highest value in the history of our country, which is very interesting when you think about all the things going on, and yet we're building more houses than we've ever built, and now we're building bigger houses that cost more money. I don't know, it just seems very intriguing to me. Some more numbers, and these are just, I get these questions a lot, so I figured I'd give them to you. 90% of all the single family homes in the United States are made out of frame. And that means we're going to talk about different kinds of frame, but that's wood frame. Could be stucco houses, could be other things, but they're all supported by wood frame. Average cost to build, $170 a foot. This is all going to be tied back to builder's risk in a few minutes. The average completion time of all homes built is 8.1 months. It's a little deceiving because let's think about the next bullet. Houses built by owners or custom built houses by builders take the longest time at 13.5 months. So the 8.1 is an average. You have what we call large tract builders that build a lot of homes in the United States, and they build them very quickly. But then there's a whole other market segment of these custom built homes that take much longer. They'll have major ramifications for you agents writing builder's risk coverage. And the permitting process also takes several months in parts of the country. So we'll talk about that a little bit too as we get into the regional aspect of this. There we go, regional considerations. For those of you that live in different parts of the country, I would think you already know these things, but I think it's interesting to compare yourselves to other parts of the country just to get an idea. The most expensive homes on average are built in the Northeast and on the West Coast. That's just the way it is. We can talk about why, but housing is very expensive. Interesting enough, the Midwest usually doesn't get a lot of discussion when we talk about new homes being built, but they had the largest percentage increase in 2020 of any region. Now, they don't build the most homes, but they had the biggest increase year over year. So that means healthy housing market, if you ask me. The South has the shortest time to build a house. They build the most homes in the South, and they build them quick. And we could talk about why in a little while, but that just gives you an idea. And I threw that stucco out there because stucco homes, 88% of the homes in the South are stucco, only 45% in the Midwest. And I could tell you about the other territories. Frame dominates the West Coast. Could be because of the earthquakes and this and that, but most homes are built out of frame. And what I find in the Northeast is most of the new homes are built out of frame. There are older masonry homes, and today we're focused pretty much on new construction. We did a webinar a while ago on remodeling renovation, and I'll probably do another one this year, and that's a whole nother world, but mostly frame, I guess, is what we're looking at. This is something that I think we've all kind of heard. You probably heard it talked about a little bit. It's called the Builder Confidence or the Housing Market Index. This explains what it is, but basically it's just a way of surveying builders, asking them what's happening today and what do you think is going to happen in the next 6 months. Well, in November of 2020, the index hit a 90. So that is the highest index in 35 years in the history of this index. In December, it was interesting because I was reading the headlines. Sometimes you got to read through the headlines, and it said housing or builder confidence falls dramatically. It went from 90 to 86, and 86 would have been the second highest in the last 35 years. So you just had to read through the headline a little bit, but the bottom line is builders are very confident. Obviously, they had a great year in 2020, and they're expecting it to continue in 2021. So this has been very accurate over the years. If you go back and look at the housing crisis, 06, 07, this confidence started dropping, and then the bottom dropped out. So it's a good indicator of what they think is going to happen, and it usually is what's going to happen. We're going to get into a little bit of this, talking about this, but why is housing as strong as it is? Well, remember supply and demand? I'd say number one is there's not a lot of new houses out there for sale. They just didn't build a lot of them, so there's a great demand with low supply. Interest rates are very, very low, historically low, so that's really good news. Now there's going to be some headwind in 2021. One might be labor availability. Parts of the country, it's hard to find skilled labor. So that has ramifications on builders risk, by the way, too. Material prices are going up. Lumber prices, I read some articles where they continue to go up. So thus leading to houses costing more to build because the materials are more. And housing inventory we talked about. Okay, so now we're going to get to the insurance portion of this webinar. So what are some of these things that we just talked about mean to builders risk? First of all, we've talked a lot about completed value builders risk and how important it is to understand how much a building should be insured for. We're talking about how much should the house be insured for? You know, because most of these forms that are out there have some kind of co-insurance in some shape or form, number one. And number two is, I think you don't want to be the agent that undersells coverage. So, and this one's a very, very simple one. If you follow this basic formula that's on this screen, you'll never have a problem. Selling price minus land, completed value, that's what you're going to write the coverage for. We have $1 million home. That's the builder said, I'm getting $1 million for this home when I sell it. Custom home, $1 million. First question is, how much did you pay for the lot? Well, I paid $200,000 for the lot. So, all right, we don't need to insure the lot, but that means $800,000. So I'm going to write you a policy for $800,000. If you do that simple thing, you're not going to have any co-insurance problems. In the event there's a claim near the end of the project, it's pending closing, the fire burns it down, you write them a check for $800,000 minus whatever deductible you sold them. Everybody's going to be happy. So this is what the critical piece of this is. And what was the average value of a home? We talked about that a few screens ago. It was $394,000. That's the median price of a house. So that means there's an awful lot of homes out there that are above that average. And if you think about the contractor built custom homes, you know, 800,000, $1 million, 1.2 million. So there's a lot of high valued homes being built out there. At least I consider them high valued. You think about the regional considerations. I told you the Northeast and the West Coast have the highest priced homes. So, you know, $1 million home in the Northeast is kind of a starter home, I guess. That's what I had a friend of mine in San Francisco say, it's a starter home, $1 million. So some parts of the country are very expensive. You do not want to undersell coverage. So when you sit down with the builder client or even the owner of this building and building a home, this is what you're going to talk about. Selling price minus land. The median price per square foot was $170. That's a little low in parts of the country. That's the average price. Probably pretty close to that in the South and in the Midwest. But as you get in the Northeast and West Coast, you know, it costs more per square foot to build a house. So labor is more expensive, materials more expensive. Hopefully I'll explain this to you because I get a lot of questions about completed value builder's risk. Insurance to value, very, very critical. If you ever have a question and you can't quite explain it correctly to the builder or you want to talk to someone, by all means, give me a call. We can talk about insurance to value. Next thing I want to talk about is the length of construction. Remember, the average length of construction was 8.1 months. That's from the time it starts, until they sell it. That's the average time. Contractor built custom home was 13 months. I get a lot of agents and they're trying to save premium dollars and sell something. So they want to write a short-term policy on a project they know is going to take longer. It's just a bad way of writing business. I'm just being very honest with you. Most of these things should be done on a 12-month basis. Write a 12-month policy, and on the higher valued ones, you're probably going to have to write and extend that, maybe even another year. But let's start with 12 months. I think that's the minimum you should probably write these things for. We're looking at builder's risk, which is a very affordable line of business. So I would say just understand that's how long it takes to build and sell a house in today's world. And there could be 2021 could present some obstacles for materials and labor. It's probably going to get longer to build a house. It's not going to get shorter. So we're going to talk about the ramifications to not doing this correctly in a little bit too. But Impact of construction project length. Okay, so you don't want an E&O claim. I'll give you an example. You write a 6-month policy on a home you know is going to take 12 months. Well, at the end of 6 months, you forget to ask the builder if they want to extend it. So you just forgot to ask them to extend it. So then that builder on the 7th month, all of a sudden, that's when the fire comes along, the windstorm comes along, the water damage happens, whatever may happen. And then they come back to you and say, I told you to extend that. You're like, oh, I forgot to tell my underwriter I needed to extend that. So whose fault is that? We won't get into that right now, but it is a potential E&O claim. And I have seen that happen. It happens all the time. So let's keep in mind, I would say the 12 months is a good rule of thumb. The builder always wants to be accurate in their bid. So they're going to factor in how much it costs to insure the structure. So if they do it on a 6-month and they include that premium in the 6-month projection, but it's going to take 12 months, maybe the builder's risk premium is not a big portion of that, but it is a portion of that. So it makes their bid inaccurate. So they're always looking, how much is this going to cost for me to insure this throughout the whole length of the time? And here's the other one. So how many of you, and I've been involved in a lot of these, first of all, you thought it was you forgot to extend it. So now you call the underwriter and you say, oh, that home that I insured with you, I forgot to extend it. I need to extend it now. Well, the underwriter looks at it and says, well, we've had a 2-month gap in coverage, and now the home is 90% complete. And you want me to jump back on it? Maybe I don't want to jump back on it as an underwriter. So now you've created a problem for the underwriter, because now obviously they want to try to help you, but they can't. And now I don't know if any of you have gone to the marketplace to try to find builder's risk coverage on a 90% completed home that had a gap in coverage. So you get the idea. You just don't want to do that. If you write it for the right amount of time initially, or at least close, you eliminate the need for extensions. You eliminate all these other issues. And so hopefully this makes sense. And we're going to see more and more of this in 2021. These projects are going to take longer. That is my projection. Looking forward, everybody wants to know, when you talk about economics, it's easy to look backwards and see what happened. I mean, that's what you have to do initially. So that's why I went back and looked at 2020 and I said, what happened in 2020? We all know all the things in the world that are happening, but from a construction standpoint, the small commercial market was stable. 2020 was basically flat over 2019. That's not bad, it was flat. The residential market, which is the detached 1 to 5 family structures, was up 12%. Phenomenal growth, projected growth to continue in that residential piece. So this is my projection for 2021, and I put a lot of emphasis on that builder confidence index, because they're the ones that are doing it every day. They're the ones that are having to budget, hire people, borrow money from the banks, all of those things. So they do it based on their confidence level. So for the next 6 months, they're pretty confident. And I think I'm going to be pretty confident. I know a lot of things in the world can change. So my prediction is we're looking at continued growth in residential construction. Now, something you want to keep a really close eye on would be, one, interest rates. Obviously, if interest rates go up, that does affect housing directly. Could slow things down a little bit. Number 2 would be that housing inventory, 4.3 months. If it stays right around that level, even goes up to 6 or so, that's okay. Once you start seeing that increase over 6, then things will slow down because the supply and demand takes over. But the other piece of this is the tract builders, the large, giant national builders, are a completely different subset of what we're talking about. What I'm really talking about and focused on today is the custom home builder. Now, some of these guys build a lot of homes, but they're not building thousands of homes. That particular segment during the housing recession in the mid 2006, 7, and 8, really got hit hard. People were building custom homes. We're seeing a big comeback in that segment now. So these custom builders are out there. Those are your insureds. If you have written them in the past and maybe you diversified and got away from that, I might want to think about, if I was you, I'd think about going back, finding them again, because they're probably building houses again. And this is not regionalized as far as the growth. Remember what I said, Northeast, Midwest, West, South, homes are growing everywhere in the United States. So it's an extremely good time for the construction industry. Well, that was kind of my little spiel on construction economics and really honing in on small commercial and residential. And what I would like to do now is, well, our next webinar, I'll touch on that real quick, will be some of the claims that we're starting to see on a regular basis. And we'll talk about what we can do about those claims. I think you'll find that very interesting too. You'll hear more about that as we get into it. So what I'd like to do now is open up the questions. So if you have any questions relating to anything builder's risk, we're here to talk about them. Darcy, we got anybody asking questions yet?
All right, Jeff. Yep, we've got a couple questions.
Good.
So let's go ahead and ask the first one. What is the most important aspect of insuring builders?
What is the most important aspect of insuring builders? So this is going to sound kind of trite, but I would say the number one thing is communication, which means you got to talk to them. You know, and you sit down there and you keep it pretty simple. You know, these guys are good businessmen, but you got to say things like, you know, you need to tell them, they need to communicate to you when they're building houses. When do you start a house? You got to let me know that. So a lot of times they have to have proof of insurance, but sometimes they don't. So they got to let you know when they start the house, number one. They got to let you know the value of the house, number two. And as important as anything is, you got to let me know if the policy is getting near expiration, you need to extend it. Let me know, you know, if it's going longer than you thought. So much of this is communication between you and the builder. And I think you'll find too, when they really think about all the things that could happen to their home, you need to talk about that. So it's all the coverage questions we always have, but I think communication is the key. Next question.
All right, next question. How important is equipment breakdown coverage?
That's very specific. So equipment breakdown is kind of a hybrid testing type coverage. You've heard of hot testing, cold testing, testing the building systems. Equipment breakdown is a very good coverage, I think, especially in today's world with the Internet of Things and everything being electronic and all of the things that could happen as a home's being built. So I would say equipment breakdown is one of those optional coverages that you should definitely look at and probably offer every builder. You know, usually it's around a penny rate based on the limit of the home you're building. It's a good little coverage, probably undersold in today's world. So yeah, I would say equipment breakdown, at least offer it to everybody. That's my advice to you. Good question.
All right. How do you figure out ACV versus RCV?
All right, so on a new home being built, we really don't have to worry about RCV and ACV. And I'm going to explain this to you pretty quickly. So we're building a new house, maybe even if it's an actual cash value form, the way actual cash value is calculated is replacement cost minus depreciation equals ACV, actual cash value. Well, if the depreciation is zero, that means the replacement cost and the actual cash value are the exact same limit. So for new homes, probably shouldn't be an issue once you explain that to the builder, because there is no depreciation on a new home. So that's a good question, and that's kind of what I would go for on new construction. Now, when you get involved in renovations and remodeling, we have other issues with valuation, probably for another webinar. We'll talk about that when we get deep into the renovation piece. But on new construction, as long as depreciation is zero, and you should get that, probably talk to your underwriter and make sure they agree with that. But that's the way I interpret it. They should be one and the same thing. Good question.
All right. How often do you see the homeowner buying the builder's risk policy versus the builder?
Whew. Couldn't really give you a percentage. That would be truly a wild guess, but I would say, put it this way, we have about 2/3 of our entire book of business is written in the name of a builder, and about 1/3 is written in either the name of the owner or the name of a developer, let's say. So that's probably a good guess. So we do see that. So once again, we had a whole webinar on this, but who is your insured? You need to ask yourself, if your insured's the builder, what form can I provide the builder that has the most coverage for him? Same thing for the homeowner. I get asked this question all the time. Well, I'll just get a homeowner's policy and add alterations and additions and everybody's covered. Well, Sometimes the homeowner's covered okay, but the builder is not covered. Subcontractors are not covered. And usually I see other gaps in those type of homeowners policies. So the idea would always be get a good builder's risk policy, write it in the name of your insured, whether it's the owner or the builder, and then add the other entity as an additional insured. That is the best way to do it.
All right. Got a 3-part question for you, Jeff, if you are ready.
The test, okay? I'm ready.
All right. So referring to commercial construction, what is a good way to determine the delay in opening value? Should this be set equal to the total term of construction or even a bit longer to account for debris removal? And is this coverage even available for a period longer than the policy term?
Yeah, that's going to be one I'll probably end up answering this one offline. I mean, I'm going to give you some answers, but I think we're going to have to get deep into this one, because some of that, there's some other more abstract coverages that you can buy that maybe you could extend it. For the most part, builder's risk is written for a policy term, 12 months. Maybe you extend it a few months because the thing was delayed. But then once that coverage is done, it's done. Builder's risk is based on course of construction. So once the financial interest of the builder is done, they've sold it, they've closed on it, builder's risk is done at that point. Then you got other coverages you might get. That's number one. Number two, as far as delay in completion and some of the more abstract soft costs, there are worksheets out there. I have sent those to people before. So whomever's asking this question, Darcy, make sure I get their number and I'll call them. But I think that's probably the best way to answer that one. But hopefully that helped a little bit. Good question.
All right. Is there a difference in coverage on builder's risk IM form versus on property coverage form?
Yeah, when I talk a builder's risk form, I'm talking about a proprietary inland marine form. You have two entities out there. You have ISO and you have AAIS that are kind of the governing bodies of these things. So they both have their forms, but most companies have their own proprietary form. And so when I say builder's risk, I'm talking about inland marine builder's risk coverage. Property form can be extended a little bit, but it's really not designed for course of construction. So, and there's enough carriers out there. You can always get a builder's risk policy. Now, I will say this, being a proprietary form, take a hard look at what you're selling. That's the whole point of these webinars, is like, read the form, pick up the phone, call your underwriter, ask some good questions, because they're not all the same. But I am a big believer in the marine builder's risk form. What you need when structures are being built, commercial, residential, whatever it may be. Good question.
All right, Jeff, it looks like that was all of our questions for today, and good timing since we are out of time.
Whew.
So if you have any other questions, you can contact Jeff or Donna on the screen there, and take it away, Jeff.
Yeah, once again, I really appreciate your time today. It was good news. The housing market's up, things are good. We want to write business. If you have any questions on anything we talked about or anything to do with builder's risk, here's the two people you can call anytime. We're available. I'd love to talk to you. And we look forward to seeing you next month when we talk about some more stuff on builder's risk. Everybody have a great day, and I'll talk to you soon.